So we saw markets doing okay until Jay Powell started talking, and that's when the action really began to happen. The S&P sank when he talked about keeping options open. We saw that big spike in the 2-year. So how certain are you feeling now, after that press conference is out of the way, about the course of monetary policy this year?
Yeah, I think this has been, this meeting in particular was a bit tricky because coming into this meeting, you had an inflation print which was running quite hot. And if you look at the headline year numbers, it'll probably stay hot at least until the April month, right? And if you look at growth indications, it's been slowing down, but you can kind of assess that as being temporary and it's still very early stages. So it was entirely up to the Fed which way they chose to go. And Chair Powell and the FOMC has decided to go more hawkish. This is a bit of a, becoming a running trick where every meeting since the June FOMC, the Fed has been surprising on the hawkish side. So at this point, JPMorgan still forecasts 4 rate hikes this year, starting in March, which, Chair Powell all but confirmed. So we'll see how this plays out. But, like him, we're keeping an open mind in terms of how this policy path might change in light of incoming information.
So Asian central banks, with the exception of China, obviously also looking to move down that tightening path a little more. If you're looking to put money to work in the equity markets at the moment, where do you go? Where's the best place to be?
But, well, by region, globally, I think Asia is the place to be. If you look at the 3 things that are working in our favor this year, it's going to be that value is doing well. And this is something that we think will continue to do well in phases. It'll come and go. But the second thing is China, which is starting to turn around post a policy pivot in December. And the third thing is that the dollar is probably not going to be strengthening quite a lot as we saw last year. So you put those 3 things together, then Asia as a region looks really, really attractive from a global perspective. And within Asia, you're right that, if you just follow the policy, then China is definitely the place to be. If you look at our market preference framework, China was upgraded to overweight earlier this month, which I think was a very timely call. And on the other hand, we actually downgraded to underweight 3 markets that had been consistent overweights last year, which is Korea, Taiwan, and India.
And what do you think of the semiconductor space, especially in the likes of South Korea, Taiwan? Of course, we had Samsung this time around missing analyst estimates because of those one-off expenses.
Yeah, so the semiconductor, I think you have to really differentiate between Korea and Taiwan here because the industries follow different cycles. The Korean space is much more linked to the memory cycle, which has been a little bit better. So we have been relatively preferring the memory complex within the tech, within the tech sector, whereas the semiconductor space in Taiwan has been looking at a cycle which is about to peak this year. So timing the exact peak of that is difficult, but the risk reward there definitely looks a lot less attractive. So like I said, our framework is underway in both markets, but between those two, perhaps Korea looks slightly better from a tech cycle perspective. You have to also take into consideration valuations, where again, Korea stands out better.
And could we see more upside given that LG Energy Solution has finally made its trading debut?
Well, LG Energy Solutions could end up being the 2nd largest stock on Kospi just by the end of today, or definitely by tomorrow. We'll see how that plays out. But if you look at the Korean market right now, there's obviously a very large chunk in the memory-linked space. There's a very large chunk of value within the banks and the industrials, and now you have, which is probably among the larger markets in the world, Korea has the largest exposure to EVs and EV supply chain at this point. So that, from a structural perspective, also looks quite interesting.
When it comes to the divergence that we're seeing in all of these central banks and the pace at which they're moving and even going the other way around, whether it's the BOJ or the PBOC, how will that be felt across assets? What will you be watching?
Yeah, so I think the one simple rule of thumb is just to follow the policy, right? So you go where the policy is being eased, and that in this case, at least for this year, it's definitely going to be China. So you prefer China over the rest of the other markets, and even from a global perspective, it definitely looks to be the case that China is one of the only larger places where policy is being significantly eased. China policy has always been somewhat disconnected to global cycles. So, like for instance, they were tightening quite aggressively last year when the rest of the world was not. And China did underperform quite spectacularly last year. So if that starts to reverse, then that will be one market we'll be very focused on this year.